What's up, guys? Thank you for tuning into Token Metrics TV and to my channel, The Quant Insights. This is Jad, quantitative analyst at Token Metrics. Today, we're going to be discussing ways to determine the current market regime. Are we in a bullish or a bearish market? I know it's a very hard concept or very hard to model this thing, because as soon as you feel like you're in a bearish market, then prices start going up. So it's a bit tricky. So today we're going to discuss about models that we've been researching, we've been developing to deploy on tokenmetrics.com so that it could help you better understand where we are in the market. So let's get started. So first of all, at Token Metrics, we have the TM grade, which is a very good tool to use to know on a short term if it's a good time to buy or sell. By the way this grade is constructed, it works extremely well in catching trends. And as you can see here, it's just a grade on one coin, and it is Bitcoin. The grade is in blue compared to the price in red. So obviously, every time we have a high grade, we want the price to be going up to see if it's actually accurate. And it seems to be working pretty well for Bitcoin, especially during this case here and during the crash earlier in May, where the grade ended up being low most of the time, where prices were going down, and high when prices were going up. Obviously, nothing is perfect. You're going to be a bit laggy, or you're going to have some delays in reaction. But overall, it's a very good way to know when to buy or sell a specific coin. So this is how the time series of grade and price are changing. And if we actually go ahead and build signals based off of that, signals being that every time the grade goes above 80, I want to buy, and I will hold until the grade goes below 40. And these would be the signals that we get. Not a lot of signals, so you don't have to be trading a lot, but still pretty good performances where you were bullish the entire run-up, bearish this drawdown, and then obviously not perfect. Like here is a false signal, for example, and here you get a bullish signal, which is not at the bottom, but closer to following the trend, because here we're not trying to determine the dip or the top exactly. We're trying to follow the trend. For example, here we don't get the bearish signal right at the top. We get it after we are more confident in a bearish scenario. And of course, after you get a bearish signal, there's no guarantee that price are just going to keep going down. Like here, it went up again, but the overall condition was still pretty bearish. So this is how the signals using TM grade would be on a specific coin. Now, this is recap from previous videos, but it will help introduce the next topics. So, talking about next topics, since we already have TM grades for individual coins and we can build signals for each one, like I just showed, we can construct it for the whole market as a whole. We can see, okay, what is the proportion of coins that have a high TM grade compared to a low TM grade? If most of the coins have a very high TM grade, then obviously I would think that we are in a bullish market. If most of the coins have a bearish grade, then we could be in a bearish market. Another way to be even more detailed about this is we can divide the coins or the market in different batches. Like here, we have the top 10 coins, top 20, top 50, top 100, all the way to top 300 by market cap. I know this is a bit messy, but I would just want to show you the idea in general, because what I'm trying to see is that, okay, if the majority of the top 10 coins have a low TM grade, does that mean that it also correlates to the entire market? Like all of the 300 coins should have low grades, or which one comes first? Are the top 10 coins becoming low graded, or the top 300 coin, the majority is becoming low grade? Just wanted to see here. And here you can pause and you can look. I know it's very messy. And here the pink line is the total crypto market cap time series, but it could give you a nice idea. For example, what I can try to see here is the blue curve is the top 10 coins. And here is the percent of coins that have low grade. So every time the blue curve is at 0 here, it means that all the coins in the top 10 have a high TM grade, which shows that, okay, price was going up. And then here, most of the coins in the top 10 had a low grade, and it was during that dip. Now, what I'm trying to see is what comes first. Do the top 10 cryptocurrencies become low graded before the majority of the 300 or 600 coins become low graded, or what? I'm trying to see how I can be earlier on the TM grade signal. For example, here, I simplified it. In green is the total crypto market cap. In blue is the percent of coins that have a low TM grade out of the top 10 coins only, excluding stable coins, of course. And in orange is the proportion of coins that have a low TM grade out of the top 300 coins. So here we can see, okay, usually during uptrends, the top 10 coins will usually all have a high TM grade, way faster than the top 300 coins. Because out of the top 300, you can still have a few coins that are uncorrelated to the market and are not having a very high TM grade. However, during a market downturn, for example, here, this dip here, or the big dip here, you can see that the top 300 coins will start becoming low graded. The proportion of them will be low graded faster than the proportion in the top 10 coins. This makes sense because, like, obviously top 10 coins will be way less volatile than the top 300, and the top 300 are more risky. When you have a market downturn, you can expect the low cap coins to have a much bigger drawdown and hence a much lower TM grade than the top 10 coins. So here, this plot shows an idea and shows us, okay, how we can try to be before or be a bit earlier to these signals. And when we go ahead and build signals, not on individual coins, but on the entire market as a whole, this is what the current version of the TM grade indicator looks like. Now, this is currently not live on Token Metrics as of yet, but it will be in 2022. It's already been developed, but we're just trying to push it on the website for you guys to use. Now, quick insights on this. Like I said, we're not trying to time the bottom or time the top. Me personally, I don't really believe in timing the market, so I would rather be more confident and be a bit late when I perform the buy or the sell signal. So here is the total crypto market cap and the signals I get by looking at all the TM grades we have on Token Metrics. If the majority of TM grades are very low, then I would be bearish. If the majority are high, then I would be bullish. And these would be the signals that we get on the total crypto market cap. So as you can see, it performs pretty well. You get bullish, and here you go bearish. Obviously, you would prefer to go bearish here, but you weren't very confident. At this point in time here, the uptrend was so strong that you didn't really feel like, okay, we might be in a bearish phase. It comes when you become more and more confident in the drop. Like here, it wasn't very good, like probably got a false signal, but here it was slightly better and going bearish a bit earlier. And here was a perfect signal for the big crash in May. And then obviously you buy back at a good time, not perfect here, but still pretty good time. Sell at a good time and then buy back a bit late. You would have probably wanted to buy here. But obviously no model is perfect, but this is still a pretty good indicator to understand where are we in the market as a whole. And the last reading of this indicator was in November, maybe mid-November or late November, where it turned bearish at about 2.7 trillion for the market cap. And currently the market cap is around 2.3 trillion. So that would have been a pretty good signal very recently. So this was the first indicator, the TM grade indicator, where we apply it on individual coins and then apply it on the whole market cap, and we get signals like this. Now let's move to the second indicator I want to show you guys. I already mentioned it in a few videos and to our customers, where what we call the breakout indicator. It's using some technical analysis indicators like the Donchian channels and things like that essentially, it trades a breakout. Whenever you have a breakout from a previous resistance or support, you want to trade that. So you're not trying to buy the dip as well or sell the top. You're trying to see, okay, when we break out from a specific resistance, that's where I want to go long because I think a huge candle is going to come in. A good example in this chart here would be this bullish point here, where we broke out from the very recent resistances and then we started printing huge candles. Similarly here, this bearish point on Bitcoin, this is a Bitcoin chart. Here we broke out below this support that was here. And as soon as we broke out below it, we were saying, okay, we're turning into a bearish phase, which was a very good signal to follow. And the most recent signal was also pretty good here on Bitcoin, where it got bearish before the big drop. So this would be the signals. I already discussed this indicator, so I won't be going into detail about that. You can go to our previous videos to know more about the breakout indicator. But this is the signals we get on an individual coin, which is Bitcoin in this example. And if you actually backtest, performance is very, very good following these signals instead of holding. This would have been for Bitcoin. Now, instead of doing a 4x for holding, you do 16. Accuracy of trades, although we only have 8 trades, so it's not very significant, but still pretty accurate. And max drawdown is only 26%. And we've probably been somewhere here or here, compared to a max drawdown of 67% for Bitcoin. So that's a pretty good risk management tool or a trading strategy. So now what we can build off of that, like similarly, I'm going to go coin specific and then on the entire market as a whole. So now coin specific, this is Bitcoin. I want to look at the current close. How far is it from the resistance and support? And how far is it from the midpoint between the resistance and support? If it's above the midpoint, then it's going closer to the resistance, so momentum is going up. And if it ends up breaking above the resistance, that's where I really am confident in saying that, okay, the trend is up and I'm bullish. So here, these clouds are just the distance between the close and the midpoint between that resistance and support. And the reason why I wanted to do this is because it is telling you in advance to start preparing for a bearish signal. Like before we get this bearish signal here, if we look at this, we can know beforehand that, okay, a bearish signal is coming soon. How? Well, we can look at a few things. First of all is the divergence. So obviously the clouds are performed pretty well. For example, here, this big dip, you can start being bearish at a point here. And this big COVID dip, we're bearish at a point somewhere here. And what I want to show you guys, what I like about this is that, okay, we got a bullish signal here. So we were like, if you go here, we have a bullish signal here. So we were long this entire rally. But we didn't really know if the strength it was increasing or decreasing. Here we can tell because we can look at the distance of the close to this midpoint. Is it increasing? And is there a divergence between price and this? So for example, here we have a bullish signal somewhere here. And then we realize that, okay, the distance is increasing and increasing. We have higher highs. So this means that the trend is going stronger and stronger. And obviously here we have an exponential move. But then at this point, using the previous signal, we're entirely long. But here we can start seeing, okay, I'm still bullish, still green, but the highs are getting lower and lower and lower until I turn bearish. So here I was very bullish. I was still bullish, but the highs were getting much lower, although price was making higher highs. So there's a divergence between these two features. So I at this point here, I could be saying, okay, I'm still bullish, but way less. Like I'm turning into slowly moving towards a bearish phase because it was making lower highs, and then eventually it turns into red here, where we get the sell signal, and then turns into a whole bearish phase. Now, another way we can look at the same thing, but instead of just looking at the midpoint, I also want to highlight the breakout. So here it gives us an early signal that let's see. For example, here. We are in the red cloud, which is not the dark red, because we are bearish, but we didn't really break out from the support to go completely bearish. Once you see the dark red, it means that we did break out below the support line, which signifies a very confident bearish signal. Similarly for the bullish phases, where you start off with like green clouds until you get these breakouts from resistance, and it's a dark green, so you're way more confident. I hope this makes sense. I don't know if I explained it extremely well, but visually I like it, and I hope you can see visually. I think the best visual will probably be here, where we are bearish until here we are completely bearish at this point. So moving off from individual coins to the entire market as a whole. So here also plotted the total crypto market cap. And here I'm looking at the percent of coins of the top 100 that are breaking out either above in green or below resistance or support. So here is the percent on the left side. So here, at this point in time, I'm saying that 40% of the top 100 coins are currently at this date breaking above their resistance, which signifies a bullish trend. And then you can start seeing, okay, here we had 40%, and then it started dropping and dropping, and here we had 30%, start dropping and dropping. So although we didn't get bearish here, we can still start feeling that, okay, the trend is slowing down, momentum is slowing down. And then in red, obviously, is the bearish phase where, okay, here on the total crypto market cap, we start having more and more coins going below their support, breaking below their support, until a lot of coins break below. Here we had over 50% of our coins breaking their support. So that's a very strong bearish signal. Similarly here, and similarly very recently here, where we start having an increase in coins that are breaking below, and that is preparing us to say a momentum is going this way. Now, similar, but instead of just breakouts, I'm looking at the percent of coins that are below or above the midpoint between the resistance and support. And here over the top 100, and you can also construct it in cloud phases to see the market condition in a much better way. Some insights we can look at this is whenever the range of the cloud is extremely big, we are very bearish because a lot of coins are below that midpoint. For example, here where almost all of our coins were below, so we're bearish on the entire market at this point in time, total crypto market cap time series. And then similarly here, where we were increasing the bearish phase. Now for the bullish phase, the best insight from using these things is you can start seeing, okay, how is that cloud changing? Here it was a very big cloud continuously going up in range, and we had a pretty strong uptrend in the total crypto market cap. And then that cloud started becoming smaller and smaller and smaller. And that's where we were saying, okay, we are not as bullish as before. Here we turned bearish, here we turned bullish again. But this cloud and this cloud are completely different. So here you can say, okay, I'm bullish, but not so much. So I'm still preparing for that bearish signal or bearish regime to come in. And in fact, it does come in pretty strongly, I would say, here. And notice this part here, where we're really uncertain. This is kind of preparing us, hey, things are changing. We might be switching to bearish regime, which is this big bearish phase here. Then we go bullish again. And then this bullish phase is very different from this bullish phase, and it's reflected in this indicator. All right, so this was using the breakout indicator for the entire market as a whole. Now let's go to our third indicator for the entire market. And it's just very simple, moving averages. Either exponential moving average or simple moving average. In this example here, I'm just using a simple moving average, and I'm using the big one, the 200-day, the most famous one, Obviously, 200-day moving average is going to be very slow in terms of reaction. So you can't really expect a bearish signal to come at the top at all during using a 200-day moving average. But here as well, I'm not just looking at the moving average and the crossing. I'm looking at the distance between the close and the moving average to see if that distance is becoming smaller or bigger to evaluate the momentum. For example, here, the distance was pretty bearish, shown in red. And then distance exploded up during this time, and then started going down, 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 down until it flipped to a bullish signal. So this also helps you identify where we are in terms of trend momentum for a specific coin. This is Bitcoin right here. And similarly, I like to look at these divergences where here a price is making higher highs, higher highs, higher highs, but the distance is really becoming smaller and smaller, which signifies a slowing momentum. And when you have these divergences, you can start preparing for a shift in regime in terms of momentum. And this shift does appear and does happen. So this is just one example applied on a specific coin, which is Bitcoin. And this is the same thing, but using the 50-day exponential moving average, which reacts faster to most recent prices. So you can be earlier, but you will have more variability. For example, here, you can see how we shift from red to green, red to green. But here, we're using the 200-day moving average, you don't shift as much because it's very slow in terms of reaction. So this is a 50-day exponential moving average. But similar characteristic, try to look for divergences and things like that. So now moving from specific coins to the entire market as a whole. I want to look at the percent of coins in the top 100 that are trading above or below their 200-day moving average, and how that is changing over time in terms of clouds, because this visually it's very good. Like I said, 200-day moving average is very slowly to react. So you can see here where we had the big crash, we still had all of our coins, obviously, because it was a very strong uptrend, all of our coins that were trading above their 200-day moving average. And then slowly by slowly, that distance was becoming smaller and smaller and smaller until it broke below it here. So this is pretty slow, but it tells you this is what regular or traditional finance, they like to look at 200-day moving average to identify at a very big picture where we are in the market. But in my opinion, what I showed earlier, for example, the breakout for clouds, I think works much better. Like here we can compare these clouds with these clouds. Performance is much better using breakout, and using the TM grade, I think, is extremely well to identify the market regime as a whole. So I hope you enjoyed this content. All these features we are working on deploying on Token Metrics in Q1 2022, because these visuals, I think, can give you very strong insights on where the market is in general. A lot of people want to know, okay, are we moving into a bearish market? Are we moving into a bullish market? And it's not an exact science. If you're waiting to hear from analysts, to hear their opinion, if you're in a market in a bullish or bearish, you already know that it's not very accurate. And even these models are not going to be extremely accurate, but these are data-driven models, so they remove the emotional part and things like that. So it gives you an additional way to look at the market instead of just looking at analysts and seeing what they think of the market. So thank you for watching. See you next time.